Hi everyone, welcome to my video. My name is Amit Khanuja, and in this video we'll be looking into that the markets are at an all-time high. So what exactly is the thing that you should be doing next? Whether you should be continuing with your SIPs, whether you should be doing lump sum investing, or you should be waiting for a crash, or whether you should be building your opportunity fund. Right? So let us discover that answer and let's start with today's video. So guys, before we continue, do hit the like button and subscribe to the channel if you want such more content. So let's start with the video. So if we know that the markets are at an all-time high, let us look into the data. If you look into sensex, so sensex is trading at an all-time high rate, so it has touched almost 80,000. Right? If you look into nifty, it is already trading at 24,300 points. Right? We can clearly see that the markets are at an all-time high. Now comes the question, okay, we understand that the markets are at its pinnacle or at an all-time high. So what exactly a retail investor should be doing? At this point of juncture, we need to understand that what exactly can happen into the market from this point, whether the markets might fall from like, let's say 10, 12, 15% from here, or maybe the market might see a time correction and might trade between the channels of somewhere about 72,000 to 83,000 points, or the markets might break the channel and touch 92,000 from this point, which is somewhere about 10 to 12% of gains from this particular point. Right? So what exactly can happen into the market? Trust me, I'm not the right person to help you with that answer. I cannot predict the future. And if someone is predicting that future, what will happen next into the market? Either that person is a god or maybe that person is lying. Right? So with that being said, guys, I previously mentioned that the markets are trading at an all-time high. Right? But we need to understand one thing. Is it the upper ceiling of the market? So now you might be curious, okay, what is upper ceiling? Let us look into the sensex historical data in order to understand the context, and then I'll explain you what exactly do I mean at this particular point. So this is last 5 days of sensex data. What I'll be doing is I'll be considering the maximum data of sensex. So we can clearly see that the graph has now moved from somewhere about 1980s to the current date. Now the point that I'm wanting to highlight over here is, let us take an example of this particular point, that is 2008, right? You can see that the markets were at an all-time high in this particular point, right? Somewhere about in the month of December, the markets were trading at almost 14,000 points, right? After a few months, right, in the month of April also, you can see there was some consolidation. So market was again trading at the similar point, but the market was at an all-time high, or maybe the markets were trading at that particular range, right? During the 2007 year, markets were at its all-time high. You can clearly see that the markets were trading at somewhere about 20,200 points, right? Was it the pinnacle of the market at that point? Yes. But was it the upper ceiling? The answer is no. Has the market never moved, as in the sensex has never moved from 20,000 points, right? You can clearly see where the markets are trading at today. If you look into the today's data, the markets has almost given 4x return, right? So the markets were at 20,000 points over here, today it's at 80,000, right? That is a simple calculation, right? So market has given 4x return from 2007-8 to 2024. Now, what happened next into the market? So the markets fell by around somewhere about 56%. Everyone knows, right? So 2007-8 were not good years into the market, but the market again recovered, and within a couple of years, the market was again trading into that particular range that it was trading before the market crash. But the interesting part is, again, this is not the upper ceiling. The market broke that channel multiple times. The market went up to 20,000, went down to 18,000, again went up to 20,000. Again, the market was pulled down, right? But the interesting part is the market has proven and broken that channel multiple times, right? You can see within few years, the market has crossed that particular channel, and again, the market consolidated, and again, the history repeats, and the market today is sitting at 80,000 level. So what I will recommend to you is simply go to Google, search for Sensex or Nifty, whichever one you prefer. Just search for the historical data. Look into how the markets have behaved in the past 30 years and you will get your answers. What I'm trying to illustrate over here, right? So even though we might be at the pinnacle of the markets, we are not into a position that we are in a upper ceiling of the market, right? I strongly believe from this point that India is a growing country. India is an emerging market in terms of trade and exports. So what I believe from this particular point is the markets will cross this particular channel, that is 80,000 mark, and the markets might touch 1 lakh or 1.5 lakhs or even 2 lakhs in the near future. When that will be happening, again, I don't have the answer for that. right? So let's wait for it. Let us discover that when the markets will be reaching that point, but I'm 100% sure there will be a time that the markets will be touching this top levels. Now, with that being said, let us understand one important parameter that, okay, the markets might go up or maybe consolidate from this point or maybe fall down, but we've understood in the long run, the markets will be going up. So what will be the key pointers from here that will drive the market up? So what I am particularly seeing is there are two key pointers that will pull up the market from this particular point. Number one, that are the USA elections, right? So if you look into the NASDAQ data, so in the last 6 months, the NASDAQ has clearly given a 25% run up. If you look into year till date, again, so that is somewhat about 23%. And if you look into last 365 days, NASDAQ has clearly given 40% gains over there. Now, the interesting point that I'm wanting to show over here is everyone knows that the elections are almost there in United States and the markets have almost started to give a run up from this particular point, right? You can see from 1st of July till yesterday, as of now, I'm shooting the video on 10th of July and the markets have closed as of now. The Indian markets, USA markets stay open. So you can clearly see that the USA market has given almost 0.5% of returns in the last 10 days all alone, right? So why is this happening? Again, the point is elections, right? We need to understand this is a macro level game that is playing around but obviously markets will go up in this particular point. We need to understand one thing, that USA markets are directly proportional to the Indian market. So if USA market is giving a run up over there, but obviously after the election results are out, USA market will go up, and along with that, but obviously we'll be seeing a certain rise into the Indian market also. How much that rise will be, again, let us wait for that particular time and let us discover that. But I'm certain that the markets will rise over there. But again, guys, this is no recommendation that you go invest your money in USA market or Indian market. Do consider speaking to your financial advisor before you make any sort of investments. And I'm just making this video for the educational purpose. And I'm 100% sure that you'll just consume the content in terms of education purpose only, right? So this was macro point level number one, that is US elections. Now, what is the second macro point? That is interest rate cuts, right? So many countries, they've already started to cut the interest rates, but let us look into what is happening onto the Indian market. So I discovered this interesting article where RBI is saying that they have pushed back the interest rate cut to the December quarter, right? So within this year, or maybe by last quarter of this financial year, that is from Jan to March, there is a strong possibility that we might see interest rate cuts over there. So again, what will happen if the interest rates are cut? So if the interest rates are cut, people will start to go to get some home loans, car loans and whatnot, due to which the markets again will see a rise. It is clear that the financial companies like Bajaj Finance, they will 100% start to move in a upwards trend. So guys, these were the two reasons why the markets might move up. Point number one was US elections and point number two was interest rate cuts. But again, anything can happen into the market. Maybe some macro level plays around, maybe some war happens or something happens and the markets are like pulled down, right? So we never know, we cannot judge that. All we can do is we can prepare for all the scenarios that I mentioned earlier. So to conclude the video, I am very much bullish onto the market. I am investing my money in SIP format as of now. I'm not taking some lump sum positions as of now. Reason being, I'm trying to build an opportunity fund. And maybe whenever I find a good opportunity in order to lump sum invest my money, then I'll be picking up some bulk positions over there. That's all for today's video, guys. If you enjoyed the video, do hit the like button and subscribe to my channel. And do let me know in the comment section what exactly you are doing into the markets as of now, whether you're picking up positions or keeping your money aside and waiting for some opportunities for a later time. Right? See you all in the next video. Thank you.